So why do investors need hard money in 2023? It's probably the most important thing when there's times of uncertainty. Banks run, private money lenders run, but hard money is always there, and it's always there for the investors. Inflation hits, home prices are stalling, home sales are stalling. What happens to institutional, the banks, the Wall Street private money that was out there for investors 2 years ago, maybe even a year ago? They start tightening up. They start making it a little bit harder for you as an investor to actually receive money. Their rates go up because they're tied to Fed funds in prime because they work on a spread or a gap. As the Fed raises their money, it raises the cost to the investor. They also start tightening up as far as what they'll lend to you. We start seeing people go from 80 or 90% of purchase price down to 65 and 70%, especially in small towns. Small towns are the ones that are affected the most. Metro areas, the large private money lenders and banks will still concentrate on that. They'll just be a little bit tighter. True hard money is from real people. Those real people need to make the interest, the money they receive on these loans in good times and bad times. So they're not going to run when something happens. They're not going to run when inflation hits, and their rates are not going to fluctuate that much. What we see in 2023, banks are coming closer and closer to the price of what hard money offers. In the Colorado market, there's a lot of banks that are only charging 1 point less than private or hard money. The Fed has a lot to do with this. It has a lot to do with those large companies and banks as they lend. The biggest hurdle we see with other lenders, the banks and the institutional, is they just start lending less. We have a client here who just came to us. This private lender used to lend 90% and 100%. Now they're offering 49% on loans in the metro area on certain borrowers. And then also on rural communities or communities that are smaller, they're down to 60% of the cost. This just all comes into the function of not only are they looking for risk, but to keep their prices low, they have to go lower on the loan to values that they offer. Hard money is just not that way. It's the same when the markets are good and when inflation hits. Like I said, hard money in 2023 is here, and it's the same as it was in 2020. Same terms, same loan to values, same everything that you could see when the times were good and when all the lenders came in. As mentioned, hard money lenders in 2023, they're no different than investors. They need to make money. They need to keep their business going just like you do. So when you're looking for money in 2023, when other people have run, you can always rely on hard money. You need lenders that are reliable, lenders who are not going to run when the Fed raises its rates. You're going to need lenders who are reliable on what they're going to lend to you and keep with their terms. They're not going to go from 90% to 60%. So in 2023, you need reliable lenders. You also need flexible lenders. You need someone who's going to be able to move with the markets, the transactions, doing first, seconds, unique land loans, bridge loans to get the next property, a bridge loan maybe until you sell the property that's been on the market for a while. In 2023, you're going to need flexibility. Third thing you're going to need is a lender that'll work with any real estate investor and or business person who has real estate. The people who have lower credit scores, no problem. One of the things that we've seen with banks and some of the larger institutions, if they've raised their credit score minimum at least 40 points. So it might have been 620 before, now it's 660. They really want everyone in the 700s. With real hard money, that's not an issue because we're not going to look at credit score. We're not going to look at experience. We're going to look at the property, the project, and if it's a good project, we're going to have the money for it. So hard money in 2023 is just like hard money in 2020. The difference is the competition. The banks, the big corporate Wall Street entities that have been lending to investors over the last 4 to 5 years as far as the Wall Street companies. They have tightened up. They have raised their rates, they have raised their costs, and they have lowered what they're going to give you. In 2023, when real estate and the money you need is the same, you need a hard money lender. But just like any time, you got to make sure you get the best deal. You got to make sure you're working with the best hard money lender. And that's why we have this free download. It's a loan cost optimizer. You could put 3 different hard money lenders or a hard money lender, a bank, and a private money lender in on a transaction and see what the best terms are, maybe loan to value and maybe just total cost. Because some lenders out there, they have low points, but they have a bunch of underwriting fees and escrow fees. all the things that add up on most loans. That's why this tool is going to help you become more successful in real estate investing. It's free. It's down below. Now, if you're looking to make more money on your real estate deals, just stick around and catch us on our next video.